This client was pretty skeptical about the first lien HELOC simply because the interest rate was higher. Until I showed him I could take his 27-year mortgage and pay it off in 5.8 years. This also would save him about $138,000 in interest. A lower rate sounds great, and that's what the banks want you to believe. When you only make one payment a month, you're giving away tons of interest paid back to the bank. The first lien HELOC calculates interest on a daily basis. So all of the income that you earn, every time you make a deposit into the HELOC, you are making your money work for you, not the bank. My name's Sean Uehara. I've been a mortgage lender almost 20 years, and this strategy is by far the best thing that you can learn today if you want to get yourself out of mortgage jail, pay off your home quicker, and use your equity to start building more wealth today. If you're married to your low interest rate, you can keep scrolling because this video is not for you. If you're still shopping around for a low interest rate, let me show you the mistake that you're making. Okay, so this guy today was skeptical about the whole strategy because he has a 4.5% interest rate. However, we're gonna pay his home off even quicker than what he was expecting. He owes $260,000 on this property. His take-home pay on average is about $8,000 a month, and he's got about $70,000 in a business account, his checking and savings, and some high-yield savings that he also has. Remember, the deposit that we're making is totally accessible to you as the homeowner. Just because the money's in the HELOC doesn't mean you can't touch it. It's just reallocating the cash and looking at it instead of saying how much money am I earning in interest, how much interest are we saving by moving the money into the HELOC. At the end of the month, after he covers all his bills and expenses, he's got about $2,000 left over. And you can see here, 27 years with his current mortgage, he would pay back about $449,000 worth of principal and interest. Here on our HELOC, we're gonna take that same $260,000 loan balance, we're gonna pay that balance off. This mortgage is your only mortgage that you're gonna have on the property. He's gonna pay it off in 70 months, saving him $138,000 in interest. The average interest rate on the HELOC, we're using an average of 8.3% to model out our numbers. But because, like I mentioned, interest gets attacked on a daily basis, we're only paying $51,000 in interest, which gives us an effective APR of 1.2%. You can see here in 70 months, we've totally paid off the line of credit. He has access to $260,000, which he wants to buy more investments with. If he stays in his current mortgage, he would have only paid down $32,000, still owing the bank $227,000 on his home. At the end of the call, this guy is now a believer. He understands how the interest calculation is working against him by staying in his 30-year fixed mortgage. He can use this strategy to pay his home off quicker because that is the number one goal. He wants to get out of mortgage jail quicker. This is how you can do the exact same thing, utilizing this strategy and stop playing the games that the bank wants you to play.